What's going on, guys? We're starting this day off with a bit of red, a bit of blood. Looking across TradingView's heat map here, you can see quite a bit of red. Mega caps are continuing to sell off. Bitcoin's down a bit. The Bitcoin miners are down a bit. Let's talk about what's been going on recently. Well, last week the S&P officially reached correction territory, coming down 10% from its previous highs. Friday of last week, you did see a bit of recovery, as well as Monday, yesterday. We have a little bit of uncertainty coming up to the Fed meeting. Now, it's already pretty much universally accepted, anticipated, and at this point almost guaranteed that we're not going to get a cut this meeting. And here's the Fed Watch tool for March. We are basically completely expecting to leave rates current, with the following meeting in May showing a high likelihood for continuing to keep rates current. Things start changing as we get into the summer though, with June showing most likely that we're going to get one cut by then. Fast forward to the end of the year and we're expecting at least 2 to 3 cuts. Previously last week we saw that the most likely outcome was going to be 3 rate cuts. Now the market's more pushing towards 2 rate cuts. Here's where rates currently are. Now, the lack of rate cuts on the short term isn't the only thing bringing fear. We have worries about tariffs. And we also have the expected GDP from the Atlanta Fed. There is a positive here, but the negative GDP still remains the same. We did change from a 2.1% on March 17 to 1.8% negative 1.8% on March 18. As we get closer to the GDP date, which is coming out later this month, the Atlanta Fed becomes more and more accurate. The positive here is they're revising their numbers closer to 0, although still negative. Now, it isn't just about the upcoming GDP and the Fed meeting. We also have an important inflation reading to look at, and this is coming out towards the end of the month. On March 28th, we have PCE, and the positive is last month we did see a decrease from December of 2.6, which is the first time we've seen a decrease in a while. I do think the market will breathe a sigh of relief if our February numbers, which come in at the end of March 28th, if this comes in under January, this will show that the direction has been coming down, which is something we also saw from PPI and CPI, although still elevated from months prior. And here's PPI. While it did come down from the previous read, we're basically back where we were only a few months ago. And it's a similar story with CPI. We did see a decrease from previous reads, but it is still higher than only a few months ago. Now, the SPY did literally hit a 10% down, which is correction territory, before bouncing, breaking out of this descending resistance, this descending channel. However, now we're basically trying to back test this resistance as a support. If we break back in it, we're likely testing our low. We were seeing some bullish divergence, although this is a weak divergence. The RSI is continuing to hold this level while the price was dropping. This is a divergence. They are not going in the same direction. It's anybody's guess whether or not we see a massive correction or get into a bear market. The best thing you can do is have a plan. What is your plan if the SPY continues correcting? What is your plan if the SPY goes down 20%? If we break our low here of 550, where are we going next? Well, if we keep falling from here, we're likely to test our previous lows that were set in September of 2024. In my opinion, if the SPY continues to fall, if it keeps correcting, if we keep seeing these mega caps drop, this is a great time to take advantage of some companies for the long term. People were begging for some dips when Nvidia was pushing all-time highs and continuing to rally. Nvidia is now down over 20% from its previous highs. And Tesla is down 50% from its highs. And we did see Tesla recently fill one of its gaps. When stocks that you believe in for the long term are down something like 50%, these are the times to take advantage. While there's fear, while there's worries about stocks that you believe in over the long term, companies that will continue to be profitable, that will continue to grow their revenue over the long term, these are fantastic buying opportunities. Now, we do have some stuff to look over with Bitcoin. Bitcoin beats global assets post-Trump election despite this correction. And Gary Chen, CEO of BitGet, believes Bitcoin can still rally to over 200,000. And despite Bitcoin's drop here, Bitcoin has still outperformed all major global market segments, including the stock market, treasuries, real estate, precious metals. Even with this pullback, Bitcoin is still outperforming every other asset post-election. And as said by Aurelie Barthier, principal research analyst at the Nansen Crypto Intelligence Platform, despite concerns over the premature arrival of the bear market cycle, Bitcoin's retracement to 76,000 remains part of an organic correction within a bull market. Stocks in crypto have realized and are pricing in a period of tariff uncertainty, fiscal cuts, no Fed put. Recession fears are popping up. And we also had some positive news the other day. Spot Bitcoin ETFs finally saw some positive inflows. However, this is only $274 million of a net inflow. And what we have been seeing besides that has been a lot of profit taking and outflows. Now, Bitcoin finally broke out of this descending resistance, this falling wedge, didn't get a very big reaction out of it. Bitcoin was down nearly as much as 30%. It's down 25% now, trying to hold the $81,000, $82,000 area. Looking at the weekly chart, we are now finally far from being overbought. We are now in the neutral territory. Bitcoin is still holding over its previous breakout. If we continue selling off, we're likely to test this resistance as support. Keep in mind that global M2 is continuing to grow. Bitcoin tends to lag behind global M2, and Bitcoin also follows global M2 with an 85% success rate. It has been continuing to tick up while Bitcoin's been selling off. I do want to talk about some MicroStrategy news. MicroStrategy plans to fund $500 million via stock sales. Now, this isn't strategy stock. They're going to use the Strife preferred stock, and they're offering a 10% dividend for it. Now, this comes after we had news the other day of MicroStrategy or Strategy buying only $10 million worth of Bitcoin, which is definitely less than they typically buy. The smaller Bitcoin purchase is likely because of this news today, that they're planning to use this Strife stock for even more purchases. Here's a post from Michael Saylor the other day. Bitcoin to 440,000 this year is programmed. Enjoy the golden bull run. Now, just for the heck of it, let's see where Bitcoin would be market cap wise if Michael Saylor was somehow right and Bitcoin reached 440 this cycle, which I think is very, very optimistic, and frankly, I think very unlikely. Bitcoin's currently at a $1.6 trillion market cap, number 9 in terms of global assets. Now, for Bitcoin to get to 440,000, let's just call it a 5x. That would bring it over Apple in terms of market cap, and it would probably be right around a fourth of the market cap of gold. One day, I think Bitcoin will reach a fourth the market cap of gold, but not this cycle. Now, let's finish this off with some XRP news. XRP is still showing strength versus Bitcoin. This article points out the Bollinger Bands, indicating that XRP is still strong against Bitcoin. XRP continues to hold above the middle band, meaning that bulls are still interested in buying XRP against Bitcoin at this point. This is likely accumulation of XRP, not continued correction. And XRP as an altcoin is holding up very, very good compared to many others. And funny enough, XRP is consolidating between two previous peaks, the 2018 cycle peak and the 2021 cycle peak. XRP is just hanging around between these two peaks, which is a very big positive if you ask me. As of late, it's been finding this descending resistance as a resistance, so keep an eye on it. If we can break it, that would be a very positive sign, and we'd likely come to take out these previous highs here, at least test them before going higher. XRP has also recently seen a bullish divergence. The RSI has been picking up basically throughout March, while the lows went lower. But what do you guys think about Bitcoin? What do you think about XRP? Are we going to break this support area and start heading to lower peaks to test? So far, it's holding up very well versus many altcoins like ETH, Sol. XRP has the most relative strength versus the others. How are you feeling about the stock market? Are you taking advantage of some mega caps that have been dropping a lot? Are you taking advantage of some Bitcoin miners? While everyone's pissed off, while everyone's fearful, while no one wants anything to do with them, are you taking advantage? This is going to be a very volatile week. We do have the Fed meeting. Coming up after this week, we have GDP. We also have PCE. I think it's going to be a very busy end of this month, and there will be a lot of volatility. But thanks as always for watching, guys, and I'll see you tomorrow.